I see when I pull your credit report. So when I pull your credit report, there's a couple of things. We see your date of birth, we see your SIN, we see your past and present addresses, we see your employment, and we see the type of credit that you have, the issues that you may have on it, and we also see your balance and your repayment history. Now, what's most important for everyone to understand on your credit, what you need to understand is that credit utilization is what affects your credit the most. And what I mean by credit utilization, I mean by if you have a $5,000 balance, if you have a $5,000 limit on your credit card, you really only want to have like $1,000 balance. If you have that credit card max, even though you may only owe like $4,000, it's not a lot of money, but because it's max to the credit agencies and to us as banks, we look at you as not able to handle an emergency if it comes up. So then that brings down your credit score significantly. It actually brings it down more than missing a payment by having all your credit max. So something that everyone needs to take to look at, like, don't close your credit cards. If you have trouble with it, maybe cut them up and throw them away, but don't cancel them, because a lot of times people just cancel them and all of a sudden they have no credit. And then that's also a bad thing too. So there's a couple of ways to work with the credit. So just that's how it looks on my end. It looks a little, you guys look, you see it.
I think there was a question.
Yeah, I just wanted to ask a really quick question. Does that also apply to things like lines of credit?
Yeah, so any type of credit, like any line of credit, any car loans, they all report on your credit bureau, but like line of credit, that works as well. So like sometimes I have clients that have massive homeowners line of credits and they're maxed out and their credit scores are really poor, and and they're people that you would assume that they would have better credit scores, but unfortunately it looks like they have all utilization, that they use all of their debts, right? So that's kind of the bad things with having line of credits. And the other thing to note, that with mortgage qualification, having unused line of credits, especially homeowners line of credits, sometimes we include you having that line of credit maxed in your ratios. So sometimes it's better to refinance and get like a mortgage as opposed to a line of credit, because one, the payments are lower. Two, when we do your services and the bank, it's easier for us to service than a line of credit. And then three, it doesn't affect your credit as much as having a line of credit maxed out. So that's just some information that, not for first home buyers, but just some tidbits about credit. So we're just going to get go ahead.
Sorry. I wanted to know, when they're looking at your credit utilization, are they taking the credit limits of all your cards into account, or are they just looking at that one specific line of credit or that one specific card? So let's say you had 10 cards or whatever, and you had maybe you're over your utilization on that one particular one. Are they going to take into account the other ones are all available, or do you know how that's factored out?
Yes. So basically they add up all your credit. So let's just say you had 10 cards and they all had $1,000 on it. And then, but one of the cards you maxed out, but the other 9 were empty. Then your utilization looks low, right? Okay. But let's just say you had one credit card that was $10,000 and you had like 9 credit cards that were like $500, but that card for $10,000 was max, but the rest were open. But that's majority of your the limits that or credit you have. That still looks bad, right? So they look at everything in totality. So it's just not one specific trade.
So is it better than, Jason, to spread them out? Let's say you have 3 credit cards. Is it better to equally spread out the credit over those 3, or does it make a difference at all?
It does in terms of your score. So if you want to keep your score high, you want to spread your balances across your credit. Right. So you want to make sure you try to like equally distribute it. If you're trying to pay things down, you want to kind of like sometimes you're just like, you want to tack one and pay that off. You kind of maybe want to equally distribute it so you keep your limits, or you could pay one off and just keep it up to the side, right? So it depends on everyone's situation. The thing about mortgages and what I love, even with real estate, everybody's situation is unique. So like, I'll be real with you. If I sat down and talked to each one of you, I think there's 35 people on this call, I would say different stuff to everybody because everyone's situation looks different. So it's hard to just say overall, this is why, because sometimes some people have issues because of this and not because of that. But overall, credit utilization is one of the main things.
I was just about to ask you that same question, Jason. Do you know anybody that you could recommend
for anybody that's looking to fix credit that does help people establish out of our community.